Good morning, everyone. Sorry I'm a wee bit late. I was just closing out some live positions on my trading account, and I couldn't actually get logged on this morning. So it was one of those issues, wasn't it? You're wanting to close out, things have come down, and I couldn't actually get logged on. Risks of trading, guys. When you got risk in the market, that's what happens. So anyway, hope you're well. It's absolutely Baltic here in London this morning. It's absolutely freezing. I'm still in my home office. If you can hear a noise in the background, I've just switched the heating on, and the boiler's just in the room next door. So if you can hear that noise, that's what that is. It's just clicked on. So I hope you're well. Final trading day of the year. Final day of the year. Things are relatively quiet, except we had quite a significant move on the Nasdaq. We've been rolling over for a while. It's the 4 hour. No, it's not. It's the 1 hour chart on the Nasdaq. I'd pulled my stop loss up last night, just below entry. I should have probably put it a bit tighter. But anyway, such is life. So we got in at 25,456, and we got closed out at 25,433. 20 odd point move, short loss on the Nasdaq. It's continued to decline overnight. And we're down at under 24,400 as we speak. The other two are closed, but they were closed in the money. The DAX this morning, which we'll have a look at on the short-term trade, the 5-minute time frame. On this setup, remember, this is a mean reverting strategy, Bollinger Bands and stochastics. We'll have a look at some of the other strategies as well on this short term, see where the trend is going. But as you can see here, use the Nasdaq as an example. We've had obviously a strong rally into year end, and then we've rolled over in the last few days. So we're down the last 4 days. Really, we topped here on the on Boxing Day on the 26th, 25,725. Couldn't quite get to a new all-time high on the Nasdaq, and we've rolled over a bit as we go into 2026. But stocks remain rather bullish here on the daily time frame. Yesterday we closed right on the 20-day moving average, which is where my stop loss was, and where we got in on the 22nd. And now we're under that 20-day. But see where we finish tonight. See where we finish out the year. Huge moves. 20% move for the Nasdaq again this year, and the other US stock markets. Nasdaq, the DAX here in in Europe. Sorry, I just got the hourly chart. I dragged the stop loss up yesterday at 5 o'clock to here. Now I've sort of closed it out this morning. That's what I was doing before I came to see you. So we were out here at 24,568 is how I got filled. 24,568 is where we got out this morning. Let me just put a line on this chart. So it was there 568. We got filled. We got in earlier in the month here at 24,284. So that's a winning trade. Just slightly less than 100 points. Take the spread off. So that's in the money for the DAX, and the S&P as well was still in the money when I closed it this morning. And again, I'd pulled the stop loss up to entry yesterday. I can't remember if I told you that or not, but again, we were closed out just here at 83,683 this morning on the S&P as well. We were filled just about. It was actually under 83, but was rounded up to 83. So 5 or 6 points on the S&P 500 to finish off a very successful December and a very successful year. I'll update you all on Friday about how we've done for 2025. I'll update the account. I'll finish that little spreadsheet I showed you yesterday, and away we go. So let's have a look at what's going on into the open. So here we see here, yesterday we rallied quite strongly on the DAX. The German data lifted us. We had some good Chicago. I know there's not a lot of data around at the moment, but I'm saying German data. The data yesterday, the highlight for me was in fact, it was the only major bit of news, was the Chicago PMIs yesterday were positive and quite significantly positive. Came in at 43.5. Spanish inflation was also sort of showing, what we've been seeing in many parts of the world. It's still remaining sticky. It's still remaining hot. I'll come back to the FOMC minutes in a minute. Spanish first reading of inflation was a bit hotter than expected, but cooler than last time. So it's under that psychological 3%. Strong, better than expected growth in Switzerland yesterday. And I'd say this was the highlight yesterday, really, the Chicago PMIs. Now then, the key data yesterday was the FOMC minutes, and I think I shared a screenshot from Forex Live yesterday. I think I'll find it again here. Basically, there was nothing real news in there. It was what we'd see if I can find it. No, I can't find it. What we were expecting, there'd been some significant discussions with the I downloaded it, didn't I? It's this one here. Was quite nice. The significant discussions within the committee, which we all, again, it wasn't particularly new, so it wasn't really market making, but it was that some were obviously we had Mirren and in particular looking for a 50 basis points run, but they reinforce this idea, as I've written here, as a cautious easing narrative, limiting near-term expectations for aggressive Fed cuts. So that's what's sort of stalled the expectation that they will go in January, and that's different since the obviously meeting, and they don't meet for still 4 weeks away. So 28th of January when they announced. They're still talked about, and this is obviously the mantra that Powell's been, in particular, has been spouting about, that inflation is important, and this one-off, as he keeps saying, readjustment of prices because of the tariffs is still not clear if that's actually come through in the data, which it hasn't yet. But will it? Obviously, the president and his entourage are hoping it doesn't. Obviously, everybody doesn't want it to from a price point of view, but somebody's got to pay for this extra these tariffs that have been applied to imported goods from the United States. Either the United States imports come down, and they have a bit, but not significantly, so somebody's paying for that. It's been absorbed by businesses at the moment, but that can't go on forever. Inventories are starting to get run down, so there's going to be an impact at some point. Second quarter 2026 is when it's going to hit, if it's going to hit. So that's what markets are waiting for. If there is a sort of spike in inflation, that obviously will impact the rate cut path from the Fed, and then obviously the personnel are changing, so that might have an impact as well from the second quarter onwards for 2026 as well. But anyway, that's where we were yesterday. That was the key news from yesterday. I should get rid of our calendar. Nothing really to worry about too much today. I'm off to the theatre actually this afternoon, so ahead of the new year, up to London. I'm really looking forward to that. I'm going to see Othello with my good lady wife. So I will see you on Friday. So unemployment claims, remember, really strong, under 220,000 last week again. That 245,000 that we got to was our sort of norm. Sorry, our spike high is still looking like a bit of a spike high. So 220,000, still a strong. That's, for me, is still a strong jobs market, and for many it is as well. So see what the next non-farm payroll, the clean non-farm payroll data looks like come the January data, the December data in January. So let's get back to what we're supposed to be doing here today. So the hourly chart on the DAX is down. So just bear that in mind when we look at opening trades. So let's just step down. The 30-minute will be down as well. There we are. It's down. It's under half of the Bollinger Band. Interesting for 30-minute traders. 5-minute trade, 15-minute trade might have picked up. No, that breached and gone lower. We've got a cross here, a very weak cross. So that's touched the outside. So that being a weak, we've got a weak buy on the 15-minute trade there at 15 minutes. Why is that 21.15? Still got more. Why is my data updated? Oh, why isn't the DAX updating? Oh, that's not good. We can't do this if the DAX hasn't updated. There we are. It's why haven't we got an update from the DAX? Let me just refresh this. Hang on a minute. Is everything else just at 21? No, Why isn't the DAX updated? The FTSE the same? No, FTSE's working. Why have I lost my DAX feed? Right, we can't do the DAX because we haven't got a feed. There you go. That's, again, risk of trading. My preferred trading platform, the DAX. So perhaps that data's wrong then, and perhaps I've lost on that one. Let's check my other platform. Sorry, just bear with me a second. I have to bring up another platform up down here. But we could have a go at the DAX as well. Sorry, the FTSE as well. It's not one I prefer, but we could do the Dow. The Dow and the DAX are my preferred appointments. Right, so let's have a look. Where's it gone? Where's the DAX? Try it. So no, this is still higher, and it's higher yesterday. No, there's obviously a problem with the DAX feed by the looks of things. Haven't seen any news on that, so that's still no. Something's gone wrong in my. So I should have done that before coming. All right, let's have a look at the Dow. We'll do the Dow. Actually, let's do the FTSE because it's one that's live. We've got 5 minutes. So where are we? There we are. We've crossed in the overbought area here. Big touch was out here, wasn't it? Or the first touch was actually there, but we hadn't crossed. So this is the patience. So it's 7 o'clock, and we rallied. We've rallied for an hour. Here we are, 5 minutes. So it's up, and we got a short here. The final cross was here, so we'd have got short there. The system would have, so if it had just been running and programmed to trade, that would have been short on the close of that candle there at 7.45, and we're nicely in the money. Stop loss initially at the top of that wick, and I'll pull it down because it's open. We get a bit of volatility. Perhaps that's our pre-market high, I'm guessing. There we are. So that's our pre-market high as well. Remember what we do when we're trading. This is our pre-market high going to yesterday's high, yesterday's closing high. Interesting. So actually, I would have left my stop loss there. I would have looked at that. Look, that's 4:30 yesterday, our pre-market. So I'll just leave my stop loss there. 9958 is my stop loss. My entry. Change that to a green for entry. Okay, so make it green. There we go. Green to go. Phones are pinging. Something's gone on. And down we go. Bigger spread on the FTSE than the DAX. That's why I don't trade it. But as you can see, we would have paid down here. So we're not as much in the money as that looks. But we certainly are in the money as that moves down. So I'll leave my stop loss there and see what the open looks like. So my preferred asset other than the DAX is the Dow. The Dow has done a similar thing, although not in the overbought area. So that would have been an entry there, right onto the right on the 20 pip, which is normally the first target. So let's actually do this, shall we? So we're gonna make this bit bigger. So we're gonna sell this and put the stop loss up here at 48,334. This is what we do. 48,334 there somewhere. So we're gonna sell that. Confirm. With target. So this may not continue down, and we've bounced from lows from 6:30. So we'll see. It's probably gone against us, but anyway, let's leave that one. The DAX, obviously, it's not open. The Dow, so it's pre-market. And we were. I should have checked this. That's not a sell at all, really. That is the low from yesterday, from earlier. This morning, and here earlier this morning as well. So that's the low from yesterday, and also the pre-market. So that's the opening low yesterday. We get into it. So it's 1, 2, 3, and let's see if we're going to go back down to it. But that was I should have done that. And normally, if I'd been trading this with some real money, I would have certainly had that marked. It's what we do, isn't it? So let's have a look. The high from yesterday should have marked as well. So yesterday Shortened day. Yesterday started right about here. So that was the high from yesterday through there. So that was yesterday's high. That was yesterday's low, which we've already tested again since. But the trend remains down here on the hourly chart. As we saw on the 4-hour chart on the DAX, where we got taken out, and that's still down. So we're with the trend going short, even on this 5-minute time frame. So let's see what happens during the London Open. So not a great deal of data kicking around to move the markets today, but it's still a live trading session. Volumes are much lower, but desks are open. I know a colleague of mine morning yet to go in, but he's off at lunchtime. So a friend of mine, so not a colleague of mine, former colleague of mine, is at his desk this morning. Very low volumes. He was telling me as I was closing out my trades earlier. Yeah, that's we're out of the money on that one at the moment. What the FTSE is the real impact. There we go. So we were down and now it's reversed. So we're getting fed some data. Was let's just see how that calms down as the opening trades go through. So good job we left our stop loss up the top of that at the day high, the top of that wick when we got in. So we're still in the money, and it's actually would have spiked. Whether the actual sell point would have actually got here, I'm not entirely sure, to be honest, on that spread. I didn't see that went down there, but that's our initial target. The 20 period here on the 5 minutes, so it may or may not go out. You can see obviously the more lagging stochastics are still moving down. We're still in an overbought area, so we may go down or we may flatten out like we got here. So, but let's just leave that for now and let's have a look at other markets that are moving. So Bitcoin's continuing to struggle. It's moved up a bit over the last day or two. We're back to 88,500 this morning. Remember what we said yesterday and on Monday, 90,000 is key, 85,000 is key, and 75,000 right down at the bottom. So there's that. Let's go up to the daily time frame on this range. Excuse me. So these are our levels we are looking for. We're looking for a break over 92 to buy and go long. Break under 85, and we could easily run into 80. Could be some more buyers down here, but we've had buyers at 85. We're now at 88. So let's just see what's happening. Interestingly, here we can see if we have a good day today or a positive day today, it's the calendar end of the year, of course, today. So a lot of people will be running their accounts to today. I did the same thing. I closed out everything earlier. So my account for 2025 is closed. It's running to week 53 from an accounting point of view. So there's lots of that going on today as well. Particularly profits being bagged, losses being bagged as well. It's the end of the financial year for the United States calendar year, and for many many jurisdictions as well. So there might be a bit of that. Low volumes, low liquidity. You're not going to get all sorts of spikes, and nothing spikes more or dips down more than the crypto market. So just watch that today, and as we start the new year over the weekend as well. So keep your mind and eyes peeled. But really, sideways action. These are the key areas: 85, 92, 95 zone, 70, 80 zone, and then 75 to the downside. So quite a wide range. But this congestion, this sideways action has been going on for a while now. We first went under the key 92 level there on my birthday, the 17th of November. So we've been sideways for well over a month now. So watch this range for any big or moves which could come. Remember, the longer we tend to go sideways, the bigger the move can be. We don't care as traders whether it's to the downside or to the upside. As holders, you obviously want to go up. But as traders, we just go with the current trend. And at the moment, it's sideways. There's no trend following really analysis here on on Bitcoin on these higher daily time frame. Shorter time frames, we've been up a bit, haven't we? We've been up the last couple of days. So if we look at like the 30-minute time frame, we'd have been moving up, and then we came back down. We moved up and down, so it's still ticking up. Yesterday's high took us to 89 to 300, 89 300. Yesterday's high for Bitcoin. Is anybody here? Anybody asking any questions? Sorry, I've lost your track. No, it's not like this. Anybody with me live this morning? It is early. It's early in Europe. Very early in Latin America and North America. Not so early in Asia, and coming to the end of the day in Tokyo and Melbourne. Anyway, Bitcoin sort of ticking up over the last couple of days as we run into year end. Oil 50 back under 58 WTI this morning, 57.80. So as we said yesterday, I've been saying for a while then, the long-term trend remains to the downside. 56 we were on Boxing Day, 56.75. So we've rallied a wee bit. But again, this week's lines, those bubbles we can see on the chart there, is 58 has remained as a resistance area, pivoting through 57 and 55, the big floor. So the trend remains to the downside, my friends. We can't break away from this 20-day moving average over the last few months. Over it and then down, over it for a while. Looks quite positive now. Big down candle on the 12th of November, and we haven't recovered from that really. Down into 55, bounce to 58, and then back down. So buy is still to the downside. Oversupply, weak economic growth, worries about 2026, both geopolitically and economically, and then the massive rise we've seen in the key commodities, or the other key commodities. So forex wise, let's have a look at the dollar today. Remember, it's had a week 2025. I can't imagine it's changing much. Yeah, down from 57 for the yen, 156. 156.70. So we're actually up on the day. So we've had a couple of so we've gone to 57, haven't we, yesterday when we were looking from the upside. So it's 56, not 57. So actually it's a bit more positive actually, the dollar. So the weak yen again continues to weaken, 56.50. But that was our upside target for the week, our zone. We've ran into again, it's 56.70 zone. The support's also held at 55.85, and then it's upper target up at 158. Well, shy of that at the moment. So yen remaining weak. So the dollar's up against the yen. So look what we're doing elsewhere. Euro 117.36. So again, the dollar's improved over the last couple of days. So down we go, 117.37. So we're below the support we identified from last week, yesterday, and continue to decline. So the dollar's seen some bid towards the end of the year, and again, it's probably a lot of that will be to do with year-end loss accounting on the for US portfolios and other international portfolios as they're moving, repatriating funds or either way back to the US or away from the US. So dollar improved in these last couple of days. So doesn't really change the longer term. Well, actually, it's quite a significant roll down, I suppose. But we're still above the 20-day moving average. So that's a key both fib level from this last leg rally here, the first fib level 23.60 and the 20-day moving average. So 17.25 is now very much in play as we start the new year. 17.25. We're still within the next fib level, key fib level down there at 16.80. So yeah, it's I think that's more to do with accounting than anything, but could be the start of something. We shall see. Sterling 134.61. So again, down 40 odd pips. We were over 135 yesterday. I got to 135.30 and then turned around So dollar improving yesterday. The PMIs, the Chicago PMIs certainly helped things there at 3 o'clock when they came out. It went as low as through our support zone. 134.50 was tested yesterday on that on the PMI data. Into our support zone from last week. Look at the daily time frame. Sorry, that was a resistance zone to the upside, wasn't it? And now becomes a support zone. Next level down takes to 133.80 below the 134 level, and we're at 134.50, 134.60 at the moment. So still well bidden again. The 20-day moving average sits at 134. So we're still positive. We might have rolled over on the daily time frame a bit. So we might be some dollar buying at the year end is what we're seeing this morning and yesterday at close and through the Asian session. It's a dollar bid, not bid, but being bought up. So the business, some business data headlines, right? So Aussie, obviously the Aussie and Kiwi have lied, and we're now closed for the new year. 66.85. Had a really good run here from the end of November. The Aussie, and again rolling over, you see the strength, but really not wanting to take this higher. Big rejection of higher prices over the last 3 or 4 days. Again, this is on low volume, remember, so don't read too much into this. End of year. Balancing 66.85, still above that key zone from a week or so, or from last week, and 66.60 is where the 20-day moving average sits for the Aussie. To check that short with any significance. Kiwi 57.75, similar pattern, similar rollover in the last 4 or 5 days. However, this one is now under its 20-day moving average. So that would have triggered some shorts earlier, which in fact it did on my trading platform. I said I hadn't taken any new trades this week, but there was some significant Kiwi shorts triggered. I think it was the day before. I know it was last night. I think what it was the day before and the 29th, and then there was some follow-through ones yesterday as well. So they've probably all played out quite nicely. So there could have been some more pips available there if I'd taken those trades, but that is trading, isn't it? That's life, my friends. So key news there for the Kiwis. It's gone under the 20-day moving average. And at the moment, as obviously lots of the Kiwi markets are closed, Auckland is closed for the new year. We are quite significantly under. It's quite a significant down candle. Whether we see some buying of the Kiwi in the American session in particular, because obviously the dollar, we shall see. But we are now under this key 58 level for the Kiwi dollar. Next support down all the way down here at 57. We get through 57.50. So that's probably the most significant move. And Swissy, where are we? Swissy still holding the gains, but it's broken out of this big down candle we saw last week. We've broken back above that, back above 79. We're at 79.35, and the 20-day moving average sits at 79.50. So it's had a really good year, breaking below the range we're in. This is zoom out. You see this is this big sideways range. It looked like we were going lower, but we did find some buyers from Boxing Day around here at 78.50, and we're now at 79.35. So an 80 pip gain from those buyers that got in at 78.50 for the Swiss franc. So dollar up over the last few days in thin trading towards the end of the year, but again, that's not a particular surprise. It doesn't really impact the overall trend. If we just use the Swissy as an example, it's been a torrid year for those that are trying to buy this particular asset. The Swissy has improved quite significantly, and we're at lows. We're finishing the year at lows for the year, around about lows for the year as well. So watch that as well as we go into 2026. Indices we'll come back to, and metals 430.20. So the significant sell-off we saw on the 29th has held up, but we've stalled or held, if you like, at 4,320, which is a key resistance area as we were going up, wasn't it? We poked around this 4,320, 4,200 before that. So here we are at 4,325 as we trade, but stunning rallies for gold, copper, silver in particular as well. Parabolic rise inevitably causes a bit of friction. So we're down. Well, actually, we finished positive yesterday. It's a very minor green candle you can see yesterday, but down more so today. So we look at the hourly candles, quite a move down yesterday afternoon, or a bit of a rally. Sorry, that was the 29th. A bit of a rally yesterday. Then we were short from lunchtime, and it's been short since. So the current low today is 4,275. So under 4,300 this morning, which is would have been a bit of a trigger. We're now at 4,325. So the 4,300 level has been broken both ways in the last hour or so. So watch that as the US traders and the European traders get into full swing. And let's just flick back to our indices. And what were we? We were short the FTSE, weren't we? Let's look. What happened? There we are. We got in here. We're back to where we were when we left it. Basically, we're still in the money. Our stop loss is played out okay, the high of the day, so we've rejected that. So we're just going to run this one down now. We didn't get hit target on target one. Now I'm going to pull the stop loss down to entry, so we can't lose on this trade. Now it's going to move. I pulled the stop loss down to entry, so we can't lose on this trade now. And what we want is the obviously another break of the 20 period moving average. That's our target level there, which I say we apparently looked like we'd hit it here on open, but I don't think the spread would have kept us from closing that. So anyway, there we are. That's in the money. I think what was the other one? See, the DAX has come to life now. No, we've obviously got a problem from the feed for the derivatives for the DAX for some reason. There's no news about it. Just reading the news on Reuters feed here. Silver shines, Korea Zinc, funding of America, and Nvidia, TSMC, that H200 chip, or the Nasdaq tank like we did yesterday. And it's end of Fed officials. The Reuters report: Fed officials show deep divisions at December meeting. Minutes show. So interesting rewinding. Yeah, so strong euro and sterling for 2025, as we said earlier in day before yesterday. So DAX isn't trading. The Dow, what happened on the Dow? Stopped out. Oh, we actually took a trade, didn't we? Oh no, we're still. Well, no, that's the one we took with you, didn't it? We're just about in the money. So we got in here, and it's been down to this target one level, the lower Bollinger Band. So anyway, that's still open. The FTSE is still open, so we're still short. And there we go, guys. I'm going to wrap this up now. It's shorter than my normal blah blahs, but there we are. That's target one hit. That's definitely hit now, hasn't it? We're through. So we've got a nice gain, a little gain there on the FTSE to close out our live trading for 2025. So we were short, or the system would have been short from 9,952. We got out at 9,940, so 10 points to be conservative given the spread on that winning trade. So there we go. I'm going to leave you all for 2025 with a winning trade. Thank you for your time and input this year. I'll see you all on Friday for the US Open. We'll trade the US Open on Friday. I'll have an update of my account for 2025. We are the proptrade.com. We are the grown-ups in the room. So we've got all the types of accounts you might want as a prop trading company. So come and check us out. And so we are here to help you. The proptrade.com is our handle. There we are, theproptrade.com. Come and find us under maintenance. Hello. What's going on, guys? I'm going to go and speak to people. Well, it says under maintenance. That's not a good sign, is it? Let's just think my account. The account must be on because it's running. Something's busted. Anyway, that's us, theproptrade.com. Lots of different types of products to choose from. 1-step, 2-step, all sorts of. Yeah, we are. FlexPay, instant funding. Instant funding is what it says. FlexPay, you small fee to get started. Once you get past, you pay the full fee there out. Payouts on demand. That's the two big benefits of the PayFlex and the instant. Obviously, the rules are a bit tighter, throwdowns and stop loss levels and stuff. So understand what's going on. The beauty or the main thing successful traders will tell you, people that have been doing this for any length of time, whether it's a few months and they're successful or it's years and years like me and they're successful, it's all about yourself. It's all about managing your risk. And we are risk managers as traders, guys. We're not money makers. The money making comes as a sideline. We manage our risk. We keep our losses small. We stay in business. We learn each and every session, each and every day, and we move forward. We trade with our personality. We trade with what fits our personality. Okay, I tend to be an end of day trader. Set and forget. It's target on, entry, stop loss moved as the trend moves. So if I'm going with the trend or against the trend, I'm aware of how tight my stop loss needs to be. But every losing trade, I know within a few dollars how much I'm going to lose if I lose. And that is the key thing. And I'm comfortable with that. If you're uncomfortable with it, you won't sleep. You won't sleep whether you've got open trades or you've been thinking about the trading day that's just gone. Keep your risk small. That'd be my mantra. It always has been. And the very best of luck to you. And I look forward to helping you and seeing you in 2026. Thanks for everything for 2025. And we'll see you all again very, very soon. Take care, everyone. All the best. Have a great new year. Those of you who are celebrating as I speak, and those of you about to celebrate in the next 24 hours, have fun, be safe, and be good. Love to your families. All the best, everyone. Bye-bye.